When you really think about it, time in the market beats timing the market. 2021 dropped interest rates historically low. But if you are waiting for 2 or 3% interest rates to take action, I think it's going to cost you. Last year, the Federal Reserve had to act to reduce inflation. Because of that, mortgage rates in 2022 jumped from the all-time lows of the previous year. In fact, from January 2022 to December of 2022, rates essentially doubled, which has never happened that quickly ever in history. In the fall, we peaked at 7% interest rates, which was the highest we'd seen since early 2000s. This rise in interest rates directly affected the monthly mortgage cost of a home, and it put a lot of buyers on hold because of affordability. But there is a shining light. As of this recording, the inflation rate is beginning to drop, and it's positively affecting the numbers for buyers. Sam Cater, chief economist at Freddie Mac, says, while mortgage market activity has significantly shrunk over the last year, inflationary pressures are easing and should lead to lower mortgage rates in 2023. This is great news for buyers. It lowers your monthly payment, and it might just be the little bit of boost you needed to be able to get back into the market and find something you can afford. But I want to make sure I manage your expectations. You should not be expecting rates like 2 and 3% like we saw in 2021. Greg McBride, who is a chief financial analyst at Bankrate, explains, I think we could be surprised at how much mortgage rates pull back this year. But we're not going back to 3% anytime soon because inflation is not going back to 2% anytime soon. Because there's a direct correlation with the rate of inflation and mortgage rates. They're tied together. So you're not going to get the cheapest rate of the last 3 years. That ship has sailed, and I'm sorry you missed it. But you're also going to be able to take advantage of these decreasing rates that should help alleviate the pressures on the monthly mortgage payment. Expectations are really key, but the key is also to remember that assuming the numbers work for you, the sooner you can get into a property, the better. So if you miss years of homeownership waiting for a lower rate, the cost of that equity and value and the cost of rising rents is probably going to outweigh the potential savings of having a lower rate, especially knowing that if that rate comes in 3 or 4 years, you can refinance and get it anyway. Cost of rent, which will rise, home prices, which over time are set to increase, and waiting for a mortgage rate that may never come could hold you back from your overall wealth building goals. And what does that cost to you? Could be priceless. Because remember, the key point is that home ownership, while an amazing dream and a wonderful goal, is also a huge wealth builder, and it's going to affect all of your future generations. In fact, did you know that a fixed mortgage rate might actually make you rich? I'm Lindsey Johnson, your resource for all things real estate. See you next time.